Market volatility is here. Oil prices surged over 30% last week. The VIX is breaking out. There's been headlines about private credit issues, and there's AI leaders that are starting to unwind. We're going to get into all that and more in this week's Sunday Scan. I'm Chris with Investors Underground, and every single week we go over the most in play stocks, themes, and sectors so that you can get prepared to trade the markets in the week ahead. So, a lot of action happening over the past week. We had, headlines around Iran. We had headlines around BlackRock and limiting withdrawals for some of their funds. And we also had headlines around NVIDIA, AMD possibly needing more regulatory approvals before really being able to export some of their chips. You had wild moves in the South Korean stock market due to the memory sector, and you started to have some big unwinds and things like LITE, MU, and SNDK all around. So a lot to go over this week, and there's going to be a lot of two-way volatility. We saw the small cap oil names really breaking out at very, very dramatic moves both on the long side and on the short side. And there's a lot of things moving basically from small caps all the way up to large caps and commodities. So we're going to get into all that and more. So I'll give the disclaimer now that I'm not a financial advisor. I mean, these are not buy or sell recommendations. Everything I'm about to talk about is for educational and informational purposes only. So let's really get into some of the main key points for the week. Before I get into that, though, we have a new episode out of The Trader's Journey. Anthony talked with a man named Peter Robbins. Fascinating guy. He's an author, and he really talks about some of the most key successful things that you need to have a long trading career. So I definitely recommend that you check out that episode. So I'll pull up some chart share in a little bit, but a couple of things I want to talk about to frame this conversation that we're going to have on this week's Sunday Scam, and that is really to think about supply and demand and the inputs into both of those. I think about those factors a lot when I'm trading anything, when I'm looking for any kind of setup. But in macro or commodity types of moves, they become much more apparent and you can really see them play out in real time. So definitely keep that in mind as I'm going through Sunday Scan, and I'll try to point them out as I'm going through some of these charts. So let's pull up some charts and really go through some of the moves from the past week, and then we'll get into the moves and the main watches for the week ahead. So kind of a bigger picture, we started to have some breakdowns in SPX or SPY, and really we've been talking about how we've just been in a pretty basic range for the last several months, and so the market hasn't really gone anywhere, and it's just kind of been floating around this range. Now we're starting to break under the more recent range, so that's a little bit of a change of character, and we also have some developments like the VIX starting to break out. And really, like I mentioned before, the VIX is a measure of 30-day expected volatility in the market. And so over the next month, if the market's expecting a lot of volatile moves, or if there's a lot of macro events kind of happening and dramatic moves can happen either way, a lot of times the VIX will start to get bid up. And you can see from some of these prior moves, this is looking like it's starting to break out pretty heavily now. And it's really from a confluence of factors. Obviously, the biggest one is going to be the Iran issue, and that is, causing supply disruptions with the oil sector, and that's causing crude oil and other, oil derivatives to spike. So crude is around $90 a barrel at the time of this, and then that's up about 30% since last week. So it's really been a question of what are the main macro events that are causing some of this volatility. So the Iran issue is one of them. Another issue is in the private credit sector. We've been mentioning this a lot over the last several Sunday scans, names like KKR, APO, and some others. And now, BlackRock, BLK, just announced that, they're limiting some, redemptions for some of their funds as they kind of restructure things. So in the private credit sector, there's been some problems or some, speculation around some problems, possibly tied to some of the AI infrastructure development, some of the loans there, and then one of the things with private credit is that private equity in general, rather not just private credit, but there's hold periods for that money. So once you have your money go into something like that, whether it's private equity or private credit or anything, there's strict rules around it, and a lot of times during massive volatility, they'll kind of tighten up those rules, and a lot of times it's due to some discretion of the fund managers, and so they kind of keep the money in, even if there's some troubles under the surface to prevent a massive outflow. So we've been seeing some headlines around that. That's another kind of catalyst for the market. a couple of worries around there. And then you had some, headlines out of left field with Oracle over the last week. Are they canceling expansion plans? Are they not? We got mixed action with that. And so there's a lot of things just going on that, can cause big moves in the market. And even though the market's been mostly range bound, we're starting to break out of that range to the downside a little bit. And in return, the VIX is starting to break out too. So definitely keep an eye on this. If we do end up having like a VIX blowout, or if there's any kind of, sharp move in the market over the upcoming week. That's just something to be aware of. So oil, let's get right into USO, which we'll use as a proxy for oil. You could see massive moves, and really here is what's going on. So ever since the conflict started with Iran, basically the big thing that has been on everyone's mind is what's happening with the Strait of Hormuz. And so that's basically a key supply route in the world for oil. A lot of it goes to China, but it also is a choke point for a lot of other areas, since a lot of oil comes from the Middle East. And so when that's disrupted, when ships are not doing what they're usually doing, then that is a big supply disruption, and that can spike up the price of oil. So I'm going to point out a few things to be aware of with the commodity sector, and how supply and demand and different timeframes can come into play there. So some of you may have noticed that while oil is breaking out, the oil producers like XOM have had pretty muted reactions ever since the news. They had some big run ups beforehand, but they've been pretty muted since then. Why is that, and what's kind of contributing to that? So, in my opinion, it's this. There's a term called backwardation in commodities, and that is when the current price of the commodity is basically high, but people aren't expecting those high prices to continue into the future. And so future prices are theoretically priced lower. And so if you apply that framework to something like XOM, you have the current price. We're using USO as a proxy for that, is very high because there's a short-term supply disruption. We don't know when that will get resolved, or how they can bring on more supply into the market. And so in the meantime, current prices surge. But if people think that those supply disruptions can get resolved fairly quickly, within the course of a couple of weeks or maybe a month, then that doesn't necessarily play in to the benefit of things like XOM or BP or some of these other ones, dramatically. Yes, they can uptick. Yes, they can, slowly grind, but the market is not fully pricing in sustained elevated oil prices. And I think that there's a reason for that. And the reason is that the Treasury and the government, they're going to be throwing a bunch of different strategies to try to get oil prices down. So we had some things with the Treasury, announcing that they're going to take some measures to take off some sanctioned Russian oil. They're going to basically try to do some things in the futures market. There's going to do some things in other places to basically put on band-aid solutions to try to get some of these supply disruptions taken care of. The problem is that oil is very sensitive to like real deal things. It's not going to just move on the headlines itself in a sustained way. What I mean by that is until they either get the Strait of Hormuz up and running again, so whether that's the Navy escorting ships through, like that's fine, but that can take time. That can take a couple of weeks to get all those logistics together. And they floated that idea. So until that actually happens, you could have continued supply constraints. Another thing that I think is more likely to happen is, even though that Trump has said that he's not going to tap the SPR, the Special Petroleum Reserve. I think that they're going to, taco out and actually do that. If you have crude oil prices going up towards $100 a barrel or so, that it's going to screw up a lot of different things with inflation, with the Fed rate hikes or the Fed rate cut cycle and everything else. And so I think that if you see oil not responding well to these, headlines, and if everything that they're throwing at it is not really getting the price of oil down, I think that they're going to announce some kind of, drawing from that petroleum reserve. And so I know that I think that that'll be like they might lose a little bit of credibility there, because they were just talking about how they don't want to draw from it and all these things. But, price is king. And eventually they're going to get to a point where they capitulate. And I think that they're going to draw from that. So just a couple things to keep in mind. So if they are able to clear the Strait of Hormuz, or if they're able to draw from the Special Petroleum Reserve, I think those would be two things that could keep supply up and running, and that could really bring the oil price down. So if you see any headlines around those things, that could cause a massive mean reversion in the price of oil. But until then, I think we're going to have a lot of little dips off of those band-aid solutions they've been putting out that will get soaked right back up until there's actual news. And then a red flag, if you see the price of things like XOM actually starting to go up a lot, that can mean that people are pricing in longer term oil prices being up higher because that would benefit the companies over the longer term. And if that starts to happen, then that can pressure bond yields. That can pressure a lot of things because if you have sustained higher oil prices, then that can spill into basically inflation results and everything else. And so the Fed might not be able to cut rates. Inflation might go over 3% again, and you could just have a whole mess from that angle as well. So, speaking of which, we talked about it a little bit last week, but if you do have oil prices spike, if you have inflation expectations come up a little bit, then bonds can get hit on that. Basically, as yields rise, the bonds fall in tandem with that. So usually during conflicts, you see people pile into bonds, but people are more piling into the dollar because again, if bond yields are going to go up, then bonds go down. So where do people hide? They hide more in the dollar rather than in bonds themselves. For the most part, there's always caveats to it. Another thing to watch, gold. So gold's been a little bit steady, but if you do have the inflation narrative coming out again, then you could have some rises in the price of gold. But again, with a stronger dollar, it's kind of been fighting that out there. So just kind of macro things to be aware of. We're going to get into more specific tickers and more specific setups soon, but you can see the same thing. You've had some corrections in the price of silver again after that initial starting to break out. And then you had some corrections in the silver miners too. So again, just like we talked about with the oil companies and the prices of oil, the commodities companies like silver miners and the price of silver, they're all related. And so if people are expecting some kind of sustained silver prices, then these should recover fairly well, even though that there's short-term dips when the commodity itself dips. Last week, we talked about BABA being vulnerable and really Asian markets in general to these global conflicts. There's a lot of knock-on effects. There's a lot of leverage that's been built up in the Asian markets, and a lot of that came out over the past week. We saw that with a lot of Chinese names like BABA. We saw that with the South Korean names, which again, the South Korean index had been going, pretty much straight up for the last couple of months. And part of that is because they're very heavily exposed to the memory sector. And so as the memory sector, things like Samsung are going parabolic, so is their market. And so you finally had a mean reversion in the South Korean markets when you had the Iran war news kind of announced. So that hit the Asia markets. And then you also have some different headlines coming out around memory prices in general starting to level out. And now you have some headlines around some demand for some AI, infrastructure, AI products basically coming into. So kind of a perfect storm in a lot of areas that have been causing some mean reversions for that. Palantir, we talked about this last week, how now that Anthropic is kind of out of the government picture, Palantir responded very well to that, along with a lot of other software names. Now that you've had a nice bounce here, it's really back to just more of a neutral stance. I don't have a hard bias on Palantir either way at this point, but it was just a nice, thing to see that play out over the last week. And we had some other things like CrowdStrike also on watch for bounces last week. They had earnings. The earnings were positive, and so you had good earnings at the same time. The software in general was bouncing, so had some nice trades there with some calls over the past week in Investors Underground. So now let's get into some of the main watches for the week ahead. And really, the big thing that I'm going to be watching is Oracle on Tuesday. So Oracle's been kind of it looks like it's been trying to bottom for a while. Obviously, a massive, massive correction in that over the last year. Once they started to talk about all the leverage that they were going to take on to build out all this AI infrastructure, and that their main kind of backlog was from OpenAI, that was kind of the reason why it was going down. And so now you've had some mixed headlines, which we'll probably get more clarity about on their earnings call on Tuesday. But some people were saying that they're scaling back expansions with OpenAI. Some people are saying that that's fake news and everything's on track. So we don't have the full clear picture yet, but we'll get a lot of clarity for that on Tuesday. But if there's a positive earnings reaction, this is around a very strong support base. So I think that you could be near a turnaround point in Oracle. I've said that before, but I think that this time it has a better shot. It's come down a very far amount. And if you have some of those key variables that took it down starting to shift, or at least, they can give some updates on it, I think you could have, a nice, start of a new trend once the market is ready for new trends to the upside to actually form. Couple other things to keep in mind. So we had Nvidia. So Nvidia, obviously big rejection off of its earnings, and now you had some news come out over the last week that the government is considering tighter regulations for things like Nvidia and AMD and all these, companies for exports. And so could that tamper some demand? It's possible. if they are not allowing, companies like Nvidia to sell as broadly as before. We saw some restrictions with China before, but if they apply that template to, more countries, then that could be a possible issue for them. So between Nvidia, Avgo and AMD. I think AMD actually looks the most vulnerable to some downside if we do start to roll over a bit more in the market and the AI theme comes in a little bit more. I think that AMD would be the first one that I would be watching for some downside if it starts to break under these kind of bases there. A couple other things to watch. So we've had some mean reversions in names like LITE, TER, SNDK, and some other ones. So basically, these have been the AI leaders that have been basically leading the entire sector over the last 2 months. So while a lot of names were range bound, you had these names pretty much going parabolic because this was like the AI bottleneck theme. So how do bottlenecks get resolved? First of all, what is a bottleneck? A bottleneck is basically some kind of supply constraint. And so if you have demand outstripping supply, then you get a bottleneck to some extent. And if those are sustained due to increased demand, in the AI sector, then those bottlenecks can go on for a long time. But what happens when you have news come out that can either, reduce demand, like we just saw, or if the market itself is starting to level out, is you can get, that demand receding and then that supply is still up there. So you can get some pretty good mean reversion trades in names like that. So we were tracking LITE in Investors Underground, and basically it was breaking some key trend lines here. And so that's what kind of got it on my radar. I didn't end up trading it too much. So I missed out on some of this move, but there's so many things moving. There's so many headlines. I really don't care about any specific setup in this market. I want to track a lot of things, and when I have the timing right and the moves there, and the news is clear and it fits into one of my setups, that's when I take action. I don't need to chase every single thing. But that being said, there's been some nice moves in things like LITE, TER, and now you have, I think, one of the potential big ones for the upcoming week will be the memory space in the non South Korean memory names, and so names like SNDK, and MU especially. A lot of these are turning into potentially what I call like a big picture breakdown setup, and so what that really means is that if you had some of these names moving up for a long time on some key driving variables, so like the AI bottleneck thesis, increasing demand for memory prices going crazy, and then just not being able to catch up. After a certain point, if you have news come out that's like, okay, demand is starting to level off, and you start to have some consolidation, they can't break the highs, and then they start to break some of these lows, and then you have a counter trend catalyst, a trend catalyst to the downside. At the same time that the market is weak, that is what I call a big picture breakdown, and that's when you can have some really sharp, moves down there. And they're actually, in my opinion, sometimes easier to trade than the parabolic mean reversion. So someone could trade absolutely, this parabolic mean reversion here, big spike up. But the problem is the few days around it are often so tumultuous and the options prices are so high that it's really hard to get a very clean trade off of those in many circumstances unless you get it like on a Thursday or a Friday or something. So what I like to do is I like to track some of these big picture setups that have been going up for a long time. A lot of consolidation. Maybe longs get their average up higher, and now you have some counter trend news, some news to the downside. While you have a weak market, and these are starting to break some key support levels, you can get some pretty nice moves to the downside when that happens. So again, whether it's 25 points, 50 points, or anything, it's really a day by day setup. It's a big picture view, but then you pick the days where the market's really weak, where the memory sector is weak, and that's how you get like a lot of follow through for those trend days down there. So whether someone's short equity or whether someone is using put options, like I would use put options on things like these personally. Again, you don't have to take huge size or anything like that. If there's not a ton of liquidity in the options market, there's enough to definitely trade for most people. But you don't have to go crazy with it. So those are a couple of sectors and themes that I'm tracking. A lot of these big picture breakdowns in the memory space over the week ahead, unless you have some counter trend news again, some positive news, and then it kind of resumes its original trend. So again, a lot of these things are going to be in play. We don't have all the information yet, but we'll get more headlines and more information as the week goes on. This is just that South Korean index. You can see that had the big mean reversion. One Samsung and one of their biggest, memory companies over there started to unwind at the same time that you had Asian markets in general across the board really fall after the Iran war news was announced. Another one on watch is BE. So I've obviously had a swing on in BE for a long time. We had some nice rips up into the 180s. And now, every time the market pulls in, this just falls back to basically the bottom of that channel or somewhere in that channel. So kind of same old same. The only thing that was a little bit different on Friday is that when that Oracle news got announced that they might be scaling back some expansion plans, BE has energy contracts or contracts with Oracle. So we'll get more clarity on Tuesday of whether or not that impacts any of that. But like big in a big picture way, like yes, for trading purposes, I think that this could definitely test these lows, maybe break below or something like that. But again, on like a very very big picture, all the energy contracts and everything like that are still in place, and they'll get absorbed over time, in my opinion. So if someone has a swing on this, what do you do when there's extreme volatility? You either are taking profits into some of these rips so that you have a better average. And then you can kind of rebuy on some of these dips, or if someone's an options trader too, you can hedge by buying put options as well, or you can always stop out. And then if it starts to reclaim and act better, then you can always get back in. So there's a lot of different ways. There's not a right way to manage some of these because it really depends on someone's time frame, whether they're treating it more like a swing trade or an investment or just a short-term trade. You can really trade it however you want, as long as you are keeping your risk in check, as long as you know that it's a proper setup, and as long as you are comfortable with taking the trade and making it your own. A couple other names we're going to get into. So BX, this is a private credit or private equity sector. And so, Blackstone and KKR, APO, and now some bigger names like GS, they've all come down. And there's a lot of bad headlines out there, especially over the past week with BlackRock. So you can see another example of this like big picture breakdown where it's been trending up for a long time, financials have been doing pretty well, and then you have a negative headline like they're halting redemptions, or basically people pulling out their capital and some of their funds. And then at the same time you have financials in general really weak, you have the market weak, so just a perfect storm. And as it breaks down underneath some of those key support levels, you can have some pretty solid follow through. So BlackRock will be on watch for more downside in the week ahead. Maybe we retest some of these levels and then make another leg down if the market is weak. IWM, I'm going to get to HIMS in a second, but IWM, you can see relative weakness as far as the indices go, while SPX has kind of been trading in that range. IWM is actually starting to lead to the downside a bit here. And part of that is because as bond yields start to spike up a little bit, as inflation pressures might be coming back, as you have higher oil prices, that can negatively impact, indices like IWM, which are the small cap indices. So now on to HIMS. So I'll zoom into HIMS. It had news very, very late on Friday that was basically a headline that HIMS and NVO are going to partner on some kind of GLP-1 or basically the weight loss product. And so that is a massive, massive episodic pivot. So we've been tracking this one on Sunday Scan for a while. I didn't catch this trade because, again, it was after hours, at like 7 p.m. or something like that on Friday. So just wasn't a desk when it came out. But we've been tracking this one, and so this is what I would call like a powder keg setup. And so that's basically where you have something that's been way, way, way oversold. It has a lot of times a lot of bad news on it. It has a lot of short interest on it, and then you have a counter trend catalyst, and that just means that the trend has been down for a long time. You had to accelerate once NVO made HIMS basically pull out all their products. They were suing them for the weight loss products on there. And then you get to a day where you really have counter trend news. Now they're partnering again, and that can cause some massive, massive, explosive moves to the upside. So already from 16 to 22, I could see this going to 28, 30 or something like that over the week. And so it's hard to chase this once it's actually moving. A lot of times you're better off with a delayed reaction episodic pivot. So what that means is that in this initial move, you have all the big money shorts are going to be scrambling to get out at any price. That can spike it up. That can cause a huge move. And so after that huge blowout move, a lot of times you have a pullback of, maybe 30% of that move. So if this ends up going to, let's say, 30 or something like that, maybe you get a pullback to 25 or something. And so, like, after it pulls back and then it starts to settle and then pick its trend higher, that's when you usually want to get involved on the long side. But if you're more short biased on this, then you can wait for that blowout, wait for that short squeeze to happen. And after it stops going up and after everyone's been cleared out, then you can usually have, a nice $5 fade or so back on that. So whether you want to play it on the short side, on the long side with options, there's going to be setups into the week ahead. So just keep that one on watch. And then the last one to really go through is going to be these small cap oil names that have been in play. So I'll zoom out a little bit. Basically, we talked about last week that INDO and some of these other names are very likely to have a massive gap up and then kind of a fade on that setup. And so this is very, very typical behavior. But then what happens is when you have a sector move as opposed to just a one-off move, is that you get an underlying bid in the sector. And so at the same time, you have normally what would be like a great short setup that would totally round trip. And again, a lot of these kind of did, but they have second lives and third lives and fourth lives because they have that underlying bid. So you have a lot of like continuous squeeze patterns happen in these. So a perfect name is something like TPET. So you can see that that initial run up, consolidation, liquidity trap, and secondary move, and now it tries to do it again. A little bit of a liquidity trap there again. Total unwind when you had some pull in the price of oil on some of those headlines, and then you basically just have a perpetual squeeze where it just clears out these moves again. So a lot of symmetrical type of squeeze moves, and this is actually a really good setup on the short side if someone is more short biased on these names. So after something has sold off a ton, whether it's with a liquidity trap, like after it's played out or whatever, if you have something that's down 70, 80% or something like that, and then it squeezes all the way back, it has to travel so far from the bottom of that to the top that a lot of times that is where it will top out. So we had some commentary in Investors Underground that I thought that this was a capitulation move to the upside, and that just means that shorts are formally surrendering. You had that volume spike at the same time that the price was spiking into a prior level, and it had to travel so far that it was likely that that was an exhaustion move, and that would clear out all the shorts that were in there from anywhere around here. So after that, you could see a really nice unwind in a move like that. So just to get a little bit more of a granular view, here's what you're looking for. If it's coming from a low base after it's sold off, 70, 80% or whatever it is, if it squeezes up and it has to travel so far to get up there, then that's usually a point where it tends to peak out. And if you have the volume and capitulation associated with that, you can have a really clean level to base some trades on. And then what are you looking for? You're looking for again. I'll zoom in a little bit more on this. So again, if this is if this is in someone's wheelhouse, these can be really good trades to focus on. So after you have that capitulation, you see where did it start to get caught. There's some spots around 230 or so, and then you had some other spots underneath here. So you're just looking for that failed follow through as that initial support turns to resistance, and then you can follow it back down there. So those are just a couple names that I wanted to touch on. Those are pretty much the stocks that I wanted to comment on for this week. There's so many macro headlines going on. There's so much action in the market. Don't get stuck, holding on to losers. Don't get stuck trying to force trades. Just wait. If you miss a trade, wait 10 minutes and you'll probably have another one set up. But it's about making good trades or great trades in this market. It's not about making a lot of trades. So always keep your risk in check. Know that, no individual position or no trade is, better than a process in general. And, just be aware that it's a headline driven market. There could be multiple market moving things happening this week. In the oil space, make sure that you keep an eye on for headlines around either a draw from the Special Petroleum Reserve, or if they are able to open up the Strait of Hormuz with the Navy and actually have ships flowing through there again. But until that, you probably have some oil prices going nuts again. So that's all I have on my end. Check out that episode of The Trader's Journey with Anthony and Peter Robbins. And I will see everyone in Investors Underground in the week ahead. And if you want to trade with us at Investors Underground, check the link in the comments and you can sign up there. Thank you so much.